Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Friday. If you can believe it. Come on, give me some sound there. There we go. Well, we only get 2 trading days this week anyways, right? Previous says, Happy New Year. Wow, we didn't have you yesterday, did we? Missed you yesterday. I don't really have anything good to start this stream off with. Let's go to the charts. So here's the 10-year treasury. We did get a little bit of selling at a point yesterday. It kind of was mostly after we left, though. During our time, it was kind of like mostly back and forth, right? But like mostly recovered. It kind of looks like it's a wash. When I look at that chart, I have hope. I have hope that we can we can cancel out this huge down move that we had off of the Federal Reserve. There's one scenario where I think we could say, hey, this is as hawkish as they get, but we still have Trump coming, right? We have to see Trump, and like day one, then maybe we can look at where they're going to go next, right? So while it looks like they might be able to pull something out here, I'm not going to hold my breath. Okay. S&P 500 still kind of dawdling around down here. It looks like it was a pretty ugly day yesterday, though. Oil's still on the uptrend. Man, yesterday, I mean, it looked good when we came in here yesterday, but they popped off yesterday in oil. So they're the biggest trending market right now, I think. Gold and silver, well, they made a little bit of progress yesterday. Copper still languishing. 6J also kind of going sideways down there in the bottom, and Bitcoin trying to get back to the 100,000, but just not there yet. So let's see here. Inflaton, that's a man. Am I saying that right? Well, new name. Welcome to the stream. And there's Amir. How are you today? All right. So for the treasuries today, what do we got? Well, it is Friday. We do have Oh, okay. I was looking at an error message. I was realizing it was from yesterday and we already fixed it. So it is Friday. Friday tends to be a little bit, difficult, confusing, I guess you could say. We do have ISM manufacturing PMI today, though. So that's a pretty big, the PMIs are the most forward-looking pieces of economic data that we get, particularly the ISM. So that's going to matter. Although, the forecast is 48.2. The previous was 48.4. I would expect that we would continue to be below 50% in contraction in manufacturing. So I don't know if manufacturing is going to be like a game changer. I think that probably what you're going to see is the market being a little bit reserved for the next 90 minutes. That number coming out, maybe a little bit of movement off of that number, assuming that it's not like wildly off from the estimates. And then the market's turning to whatever they were going to do anyways, which could result in a little bit of confusing action. So Keep yourself prepared. I'm also want to note that we've kind of been hitting this like 106.14 3/4 area here in the 2-year. You can see that kind of space right there. So for the moment, the treasuries seem to be having a hard time pushing above this. If we are in a market maker dominated market, I would expect us to probably fall back down into this area. So I don't know if that's like the greatest trade. Usually when it's a situation like this, our edge as retail traders is a little bit iffy, but it's the best thing that I see at the moment. I should come in here. I'll make sure that my degenerate gambler is still on. I don't think it took any trades yesterday, though. I need to double check it. Make sure that I didn't screw something up with it. Degenerate gambler 4. Yeah, no executions. I still have this thing up from yesterday, too. I had the one thought I had on this thing. You know what? Let's do it. I feel like I spent too much time doing this yesterday, but I do want to just finish this one thing. So no, we won't put it up here. We'll only no. Actually, we do have to put it up here. Oh, actually, I can do it like this. Okay, so the range should be by size. And then we can say if range is less than volatility ceiling, then we take the trade. That will have already been normalized by tick size, so we don't need that bit. And we just this whole bit right here like that. And we do similar thing over here. Indent. Fabius is going long here, huh? Interesting. Oh, well, I should reset things, make sure, keep track. Because I was kind of saying, I think based on market making activity, they were likely to fall down. But I don't know if that's really a good trade. Like we've had good luck with those lately, but I've always historically had bad luck with that one. So I want to at least keep track of them to see if my read on those is getting better, even though I'm not planning on taking the trade. how to do this. I always forget the rules for casting and stuff in C#. No. I don't know why it didn't work the other way, but I don't care. Little bit of clicky in there, huh? So what I'm doing is I'm telling it to only take this trade when the range is within a certain, within a certain amount of volatility. Like if the range, the high and the low is too big, it won't trade. But I need it to do it over the whole year, not just over one day. Okay. Seems like that's not working. Am I just not going up high enough? Getting a lot of clicks this morning. Well, that's working. Oh. Oh. Oops. That would kind of help. Okay, down tick there. I don't know if it's going to happen because the cost basis in the treasuries has kind of come up to meet them at 31.5. Okay, well, that's interesting. Didn't change the Sharpe ratio, but it did change something. Did work. Wait, let's double check over here again. Low. High. Okay, well, let's just try this again then. Octavia scratched it? Tell you what, man, oil's still trending here, by the way. Oh, interesting. We only need to go to 64. Oh, is it optimizing by profit factor? I like to maximize by max net profit, but there's like significant issues with doing that, right? Because it will if the strategy is bad, then it will basically optimize on the thing that trades the least. And if the strategy is kind of okay, we'll optimize on the thing that trades the most. And that's not necessarily what you want to do. So then we could go for something like maximum not max probability, max percent profitable. That might do a similar sort of issue, though. $64. In other words, include as many trades as possible, right? Oh, can you not optimize on MFE, MAE? Oh, there it is. Max. Yeah. Okay. That's kind of what I thought it would be. So the more the more volatility that we have, why is min average adverse excursion 1? That doesn't make much sense. See, profit factor, they really do pick like one of the best ones, because max profit factor is something that's not necessarily going to be affected by how many trades you're taking. But it comes out to the 64. I really wanted to be somewhere in the middle there, you know? By the way, what do I have on the R2 threshold? Spot 5? If I just take this one. It does kind of look like it when you get to above that taking on that additional volatility doesn't help. So that is kind of interesting. Yeah, it's pretty much straight down. Try that, but I don't think that that'll help much. The more that I do this, so kind of the thing that prompted this whole bit of backtesting that we've been doing the past few weeks, this one has been on a support resistance strategy. The other one is kind of based more on a market oscillation sort of a thing, where it tries to catch like the local low as it's trending up. And kind of the reason I created this was because I see so many people constantly claiming, oh yeah, you can trading it, retail day trading totally works, this technical analysis thing totally works, and here's what we're doing. And it's always these price action traders claiming they claim support and resistance and things like that. And my observation has always been that they kind of have this skewed risk to reward ratio. And so I have tried to create algorithms that are basically just kind of gambling. They're basically kind of gambling. So I guess I didn't really do that here, but if I just increase it, you notice that doesn't really make much of a difference. It's still not profitable. It's better, but it's still not profitable. So my conclusion off of this is that these people that are claiming success are not having success because of excessive risk taking like I thought. Maybe that's a factor. But my conclusion is that really what they're taking advantage of is the propensity for the S&P 500 to move up. right? Like the reason why we come to such a significantly different conclusion compared to most of the other retail traders is because we're not trading the equity index. And so in our results, we don't get that same bias. I suppose that if you were just going over the last year, that if you were running a strategy that net goes short in treasuries, that you would have probably made money, right? But over the whole time period that we've been trading, treasuries have been up and treasuries have been down. And so these sorts of that bias did not fool us in the same way that it did most of the retail community. That's kind of what I think our results are suggesting to me. Because the degenerate gambler, I was able to make it work over like a 5-year period, but the results that I'm getting look like that those results come primarily from its propensity to take longs, and then it makes more on the longs. But nothing that suggests that there's really any kind of edge in the entries and exits, or in other words, you would still do better just doing buy and hold. And I don't feel like that this support resistance strategy that we've got here is like the best representation of what they try and do, because it's not really very filtered. It's not filtered very much. But, you know, everybody's going to have their different set of filters, and you can take this and then apply your filters on top of it and see what happens. So there, we were just trying a filter that basically limits trading only to smaller ranges. That doesn't appear to me to really make a significant difference. That one's actually worse because it ends up taking more trades. And you could go and try and fit it a little bit more with the different periods and stuff, right? Well, the way that I have this set up. Oh, well, why not? Why not? Just set this volatility ceiling to 64 again. And 200 by 10. Should give us a couple 100, 400. There you go. Well, you know, remember I was saying earlier, okay, I think that you take a short because of what I'm seeing in the 2-year. And then it did tick down like a tick. And after it did that, I said, you know what? It looks like that the cost basis for the treasury has kind of risen. And so it seems like that they are just kind of trading back and forth at the 109. So maybe it's not a good trade anymore. So I think if we had taken that, you might have made one tick, depending on if you were able to have gotten filled at 0.0.5. But overall, I'm kind of proud that it was able to notice that it wasn't going to work, that we actually had it. It was just kind of stuck. Something that I find really weird about this whole thing is that the R2 period doesn't seem to do it much. The overall period seems to matter. Seems to be this optimal zone where you get into like the 170. Yeah. Where it does seem to do something. I think I would prefer it to be like that. Getting the Sharpe ratio under -1 or above -1 that way. I'm getting a little bit more of a wiggly line. So I'm trying to figure out if we can get this back to a you know, it spends time on both sides, but nope. So that improved it a little bit, but not enough. I suppose that something I could do is like ignore commissions and slippage and see how much that's affecting it. Sure. So maybe support and resistances work a little bit end of 2023, 2024. But overall, it looks to me like that's just not a working strategy. Like if you're going to trade equity indexes, you have to have a strategy that lets winners run, because you don't want to miss out on when they trend. So, I don't know. Are you guys satisfied with that? I'm satisfied with that. Oh, hey. Funny, as soon as I said, hey, maybe they're going to settle there, then they did make a move down. What's with that? But this move down went way beyond where I would expect it to go. So a real flow has stepped in here. We're also getting a decent amount of activity in here now. The market order imbalance isn't too crazy, though. So I'm not sure yet what to make of that move down. Amir says yes, confusing again. Let's see here. What's Tilt? That's a new name. How are you? Exactly correct. You need to catch the runners to offset the losses. It's the only way to high profitability unless you're scalping ticks with some decent size. Yeah. I mean, basically, we got two strategies. Probably there should be a third one. Third one that is just trying to catch runners, right? Where one strategy that we've back tested recently is more about the kind of the short-term oscillations back and forth, and then the other one is about trying to support and resistance on those oscillations. But the one that allows runners, it does okay, and the one that's just trying to trade support and resistance fails hard. So if you're going to trade ES, you have to catch the runners. But the issue still remains that I do not, or I have not been able to create a strategy that runs on ES and uses purely technical analysis, or rather price, in order to beat buy and hold. Not even to beat buy and hold on a risk adjusted basis. Like, if it underperformed, it didn't make as much net profit as buy and hold, but it had it had a smaller drawdown, or good Sharpe ratio of sorts, right? Then that would be okay. But the results that we get from them are poor Sharpe ratios. Waiting for IB break. No, I'm not. I'm a little. So this move, this impulse, is a little bit unusual. So I'm not sure that I will be able to predict very well, at least not before it happens, how far it can go. But anyways, along with that, I'm also against scaling out and leaving a crumb. You're better off trailing a stop with a full position. Well, but now you're getting in. So there's a bigger issue with that, though, Tilt. And that is that if you are using set profits and targets, the results that you get are mostly a function of the market volatility. In other words, what I have noticed, because the market is so random, if you're trying to say I'm going for X ticks on a profit and X ticks on a stop, that the results that you get out are mostly a factor of those stops and targets. And basically what you can do is you can say average winner over average loser equals R. Then your percent win rate will tend to converge on 1 over 1 plus R. So if your average win is equal to your average loss, you get an R factor of 1. Your win percentage will be 1 over 1 plus 1, which is 1 over 2, which is 50%. Right? And when you do things like you scale in and scale out, it doesn't take you away from this. It basically just means that you're taking multiple trades at the same time. Right? So now you got one trade where it's 1-to-1, and then you have one trade where your winner is more than your average loser, so that one won't get hit as often, and yada yada yada. When you combine them all together, it doesn't get you away from this kind of setup, right? So what you have to do instead is, well, the thing that I found works best, at least, is entries or exits, right? So if you have something that I'm going to enter on this thing, and I'm going to exit on the same thing but the opposite, or anything like that, you are now exposing yourself to a more variable amount of volatility. And then you're able to get a strategy that has interesting characteristics that don't just match that R formula that I just showed you. You're journaling. I mean, you can backtest it almost any way that you want, right? Just go into Ninja. Well, what platform are you using? If you go into NinjaTrader and you tell it, use a set stop, use a set target, you use enough data, you're going to find that it's going to come out to that thing. Like that if you say, my winners are twice my losers, then you're going to come out to a win rate at 30%. Oh, like, stop now. I feel like a vampire. MT5. Dude, there are so many good futures trading platforms. I personally have the huge ego that makes me believe that if I made my own platform that I could make a better one. But MT5 is like the only one that I dislike. It's just, you know, I think the thing that I hate the most about it is their algo store. Oh my gosh. A whole store just to huckster people. No, I'm not a fan of that. But no, if you go into NinjaTrader. I've never done it in MT5, so. But you go into NinjaTrader and you can have set stops and targets, you know, like do it based on number of ticks. It will almost always converge on that amount. And if you want to have statistical properties that are different than that, you have to have a different way of entering and exiting. I would also say that it's better to have something that is based on the volatility. So you can say, what is the daily volatility? And I have a stop and a target that's based on that. Or like, what's the current range? And I have a stop and a target that's based on that. But it is not get you away from that problem still. It's better because it scales with the volatility. But you still kind of end up coming into this, like the average of all of that, it still comes out to the same thing. Now, one thing might be that if you have an algorithm that is in the market most of the time, and you're doing it on ES, then that maybe works out because the winners cancel out the losers, because the S&P, there is a tendency for the S&P 500 to move up. But again, then at that point, you're not making more than what you would make if you just bought and hold, right? And that brings us to the larger thing that I'm convinced that all of my data says that retail traders don't seem to believe me on, is that what moves the market is not what the past price history is. The things that are moving the market don't give a shit what the price was 5 minutes ago, or what the price is now compared to what it was 5 minutes ago, or anything like that. And so any kind of statistical measure that you try and pull out of the market along those lines is going to show that the market is like a random walk. It's not going to work because they are just not connected at all. Now, if you take a different approach and you say, hey, why are these people buying and selling? And what are the things that would predict these people buying and selling? And you don't look at price, but you look at the news that's going on, how their strategies work, things like that. Then all of a sudden you start to find stuff. And when you look at the order flows, you start to find stuff. But price You don't, because price, basically, there's a certain amount of volatility that the market makers inject into the market, and you just can't like get away from that only using price. If a trader's success is contingent on their trading, well, I don't know if I would necessarily say that. So like the thing is I really don't think as a retail trader that you're going to have lasting success in futures trading unless you are discovering something unique. Like you've discovered something about the markets that's not widely known. You know something that other people don't. You've innovated in some form. Now, the platform that you're using does have a significant impact on your ability to innovate. I think that that's the thing that NinjaTrader really excels at. You can program it things in C#. It's a pretty good way of doing things. They've got a pretty good back tester in there, and so you can and really good way of making indicators, really good way of making order flow indicators, right? So there is a lot of room in that to innovate. Although I think that even that is insufficient, because we've now moved into this world where people are doing all sorts of crazy things with big data and machine learning algorithms and artificial intelligence, and the tools that you get in NinjaTrader aren't very well suited to that. So I think that we need a new platform that is more effective at doing that for you. But I don't know. Tilt says he left Ninja is more than freezes more. Well, NinjaTrader definitely used to have some issues. The issues that I get now, I think, are more due to myself than they are NinjaTrader. And that was kind of always the thing, is that I think so I'll just give you an example. People would use different indicators to or maybe even different data bars, right? Their own special data bar or their own special indicator that's drawing candles down here instead of a line. And what happens is the drawing code that those people write isn't very efficient, and you're creating all of these objects left and right, and eventually it creates a mess. So basically what I see very, very common is you'll come in with like 100 custom indicators on your chart, and then you're like, why is it crashing? Which I think is why NinjaTrader made this thing over here where you can like by the way, when you clear that, like the NinjaScript utilization monitor. And then you can come in and you can see how expensive it actually is. By the way, am I not using my oh, I think I switched them all once, and then like NinjaTrader, I closed it, or I crashed it doing back testing. And it didn't save. Let me do that. I think these ones should stay boxes. Box. was like, did this chart crash over here? No, it's just I don't have the crosshairs turned on. Now I pull up the resource utilization monitor again. There we go. Optimize candlestick. Sure, save that. Pavia says markets are sloppy. Oh well, no. I don't know, man. There's a real trend coming into the treasury. There's a real trend selling. I'm a little bit concerned that it could be the news coming up in 30 minutes. I think there's a real trend coming into the treasury here. Kind of happened kind of quick and out of nowhere, but okay, so now you can see, even though I switched almost all of my charts over to my optimized candlestick, those boxes use a lot more. The candlestick is still up there. I have one chart using candlestick and like a ton of using optimized candlestick. That's crazy. That's crazy. Because mine is better. Did you hear about the World Cup Championship of Trading? Yeah, well, we've talked about this before, haven't we? That every year they have this World Cup Championship of Trading. This past year they made a bunch of noise because there was some guys, I think that Vinny was in on it, but it was mostly inner circle trader claiming that he was going to win this and bombing out on the World Cup super hard. I'm not a huge fan of the World Cup Championship of Trading, so I think there's two things to it. Number one is that the strategies that you're seeing the people use in those tend not to be the same thing that we're doing. They tend to be momentum strategies where they're trading a basket of futures with positions open in multiple of these things and, managing a portfolio and so forth, right? And so there's that issue. What we're doing is outright trading. So, like you're all in, all out, certain spots, your entry and exit is like the most important thing that matters. Whereas in these other kinds of strategies, like where your entry and your exit is actually not that important of a factor. Because it's more about managing the risk of the whole portfolio. That's a pretty decent amount of movement on the open there in the S&P 500, isn't it? It's a decent amount of selling. It looks like they already have kind of held that, though. Okay, then the other issue that you get with the World Championship of Trading is that it's going to be the people that are like taking on the most risk. So like, I heard the ICT was in first place after day one, then he claimed he lost on purpose because he wanted to win coming. No. He made all sorts of... Dude, listen, that guy is just a complete BSer for sure. Yeah, he's totally crazy. Okay, so I can't read Arabic, so I don't know your name, but they say there's no strategy in Dom, there's only reading. What do you think of this? I disagree with that. So I think that the issue you run into is that a lot of people don't necessarily completely understand what they're really looking for when we're watching the DOM. Because, they're mostly focused on there's all of these different numbers from the market depth, and it's like, okay, what am I supposed to read from that? Well, it's not what's resting there. It's how things change. It's how things change. And here on the treasuries, if all of a sudden I see them stack a bunch at 28, well, okay, they didn't. They decided ticked down, and there's a relatively aggressive offer when we ticked down. So what just happened right there? I'd say it's only a small indication. You kind of got to read them all. They're like tea leaves, but a small indication that there's still some pretty heavy selling pressure on here right now. Okay, that's the sort of thing that you're looking for. And what happens is most people are over here trading the S&P 500, where it moves so fast anyways. And I don't know if those flows, if the things that you see in the level 2 really give you that much of a read over here. Whereas in the treasuries, like it's very, very clear what's going on. And so the most of the retail traders and the people that you're gonna encounter online that tell you stuff about this, they're just not going to be able to teach you a whole lot about reading the DOM, because they're trading something where the DOM is not as significant, essentially. But once you come into like our channel, and I don't know, is there anybody else out there reading the DOM on treasuries right now? I'm not sure if there is, but then you get a really good, watch the DOM in treasuries. You'll get a really good feel for how it works. And can you take trades off of that? Yeah, I think that we have a substantial amount of evidence to suggest that you can. For starters, we know that there are high-frequency trading algorithms that are working primarily off of order flow metrics. We also have some studies where they take the changes in the market depth and turn those into tokens that you can pass to a large language model. And that shows that it can create highly predictive short-term signals. So there is absolutely strategy in the DOM, but they might be trying to say something else. And that is that most of the edge that you can catch from reading the DOM has already been arbitraged out of the market. I think that by and large, that is mostly true. And so that doesn't mean that the DOM reading is useless. It just means that you're going to have more than that, right? You want to have a good reading of the DOM, but then you want to have other bigger edges that push you over the top. Okay. And so that's my approach. I'm reading the DOM, but I already have an idea of what I think the flows are going to be. My call today was that it's probably going to be relatively iffy until the PMIs at the top of the hour. But that's not what happened. We got an impulse lower in the treasuries. So now I'm watching this flow really carefully, trying to sort out what's going on. So far, they're just kind of balancing around the 28 area. There was some pressure still in here, but it looks like they're able to move between 28 and 28.5 relatively freely. So there is a bit of a liquidity hole here. I'm just going to keep an eye on it because there probably could be an opportunity for another move before the PMI. Timing wise, they would be able to do it. So we'll see what it does. Oh no, so my mind all of a sudden goes to this conversation that we had in the futures trading Discord last night. So somebody came in and I don't know what the deal was, but they were just like all of a sudden out of nowhere, like, oh, do you have a proven track record, yada yada yada. And I was like, well, like the question you're asking is not really very relevant to like what we're talking about. Like I can show you how I've performed over the past, well, forever, like all my trading ever. Sometimes it works and sometimes it doesn't. The big thing is that, again, you know, if the DOM is just kind of like, hey, that's a base and you need to have a larger edge. My larger edge is going to be how well I understand the market. Can I understand that specific market all the time? No, you can't. And so building a really long track record is super, super hard, right? But you know, the concepts that we're using, I don't think that you should base, you know, whether you spend your time on those strategies based on whether or not you found somebody else out there that made a big claim of profitability. If you do that, you're basically always going to be drawn to the people that are lying to you, is basically what it ends up doing. People that are willing to fake results and exaggerate their results and things like that, right? Really what you should be doing is you should be saying, can I prove with data from the market that is available to everybody that a particular property about the market, can I actually prove that thing? People say market is like this. Okay, can you show that? So if you go back earlier in the stream, we were kind of showing some back tests and everything. Kind of suggests that if you're going to trade the S&P 500, you have to have a strategy that takes advantage of trends. That just trading the mean reversion isn't good enough, right? And we can prove that with data, right? That's what you should look for. And we have a lot of data about order flow. There are empirical studies and research. And if you go and you watch the videos on my channel, especially like that order flow, last few videos in my order flow video series, and I give you that information. And, you know, cite the studies and tell you where to look and all that stuff. I've been in this field for over 2 years, but progress is inconsistent, going through a tough time and considering leaving because I haven't seen results. Well, so here's my question to you. If you knew that you were never going to make a dime from this, that you were only ever going to have to pay money into it, but let's not say thousands of dollars. Let's just say that to continue trading, that you were going to have to pay about the same amount as you pay for like a cable subscription. Like you're going to have to pay $50 a month for the rest of your life to keep trading, and you're not going to profit from it. Would you still do it? Right? Because you have to pay $50 to watch Netflix. It's not $50. How much is Netflix? I don't know. Okay, but you have to pay a certain amount of money to play, and you still do it, right? Because you're getting a service of entertainment that is worth that amount to you, right? So if you're not willing to continue trading under that circumstance, then trading's probably not for you. So you have to understand that the probability of you being successful at futures trading in general, but futures trading in particular, is very, very low. And that success kind of ends up being kind of like meh. Like the people have this idea that they're going to become millionaires from it. That's like 1 in a million people that actually do that. Okay. So if you're going to actually trade, there has to be other things driving you. You have to have other motivations, right? So for me, I really love just doing it. I have no problem just trading at sim if I have to. I haven't really been actively trading because I'm between jobs right now. But and I'm actually facing, you know, some of the jobs that I've applied for where I don't think we'd be able to do this anymore, and I find that very distressing. Like I do what I have to do, but I find that distressing because I love doing it, right? And I would do it even if I knew there was never going to be any profit from it. But I'm weird. That's not going to be most people. I also gain a lot of edge from it that I'm able to use for like larger household decisions, like, you know, buying a house and things like that. It's been valuable. And so, you know, I think that overall I do make more money from it, but the futures trading in most instances has been more of a loss leader than anything. Yeah. But if you've decided that I'm that type of person and really what I want to do is futures trading, then go and watch my order flow video series. There's also, if you go to speculatorseth.com/strategy.html, you can sign up for a mailing list and it will email you a PDF, a strategy PDF. that is kind of a more dense and thorough explanation of the things that I give you in the order flow video series. And that, at the very least, will get you close to break even. For most of the people that we've worked with, guys that are here every day, I would say that for the most part, they're able to break even usually, right? And then beyond that, it's up to you to find that additional edge that you need to become that super successful trader. And when you find that, don't ruin it by telling everybody how you did it. Okay? Because alpha decay is the thing. So yeah, I had a guy come in Discord, and he was arguing about this. He wanted to argue with us about this. I think that he was a price action trader, because he was bragging about, well, I don't put anything on my charts. That's usually the price action traders, right? The price action trading is attractive to retail traders because it's essentially the only people out there saying, hey, you can become a massively successful retail trader just using what you have on the chart. And people find that thought comforting. Like, oh, I already have all the tools that I need. I just need to work on my psychology and I'll be successful with it. No, doesn't work that way. You have to make an innovation. You have to have some sort of innovation. The indicators that I make are aimed at, one, getting you to break even, to, like the things that are really critical to the market that we know matter, that for some reason a lot of the retail trading platforms don't include. Like, if you're going to trade the treasuries, you should be watching what spreads are doing to some extent. And NinjaTrader doesn't include an indicator by default to do that. If you're going to trade a commodity, you should know what the value of the currency that you're trading the commodity in is doing. How are you trading without seeing what the value of the dollar is? Well, there's some issues seeing the value of the dollar because there's only one like futures instrument out there that does the dollar index, and it's on an exchange that nobody has. So we calculated ourselves, and that's this synthetic dollar index that you see down at the bottom of the screen. I don't know why I'm the only person that has a thing like that, but it's a really useful, powerful tool, right? And then I have a bunch of order flow indicators that are showing you metrics about the order flow, things beyond price, because everybody's looking at price, things beyond price. And here I'm giving you a tool that you can do your own work on and innovate with. And that's the point of that, right? They aren't indicators like, I think a lot of people, they think about indicator and they think, oh, okay, so I have an indicator. It's this new version of moving average, and my moving average is better than other people's moving average because yada, yada, yada. And like, this is how you're supposed to use it. Like, here's the strategy behind the end. It's not like that. I'm just giving you data that was hidden from you before. Like, you could watch it on the DOM, but I'm showing you these metrics on a chart now so that you can like save it, go and do a backtest and find out if they matter or not. Well, they do matter. This market order imbalance I find incredibly valuable. But anyways. Okay, Omar, I'm new here. What trading platform are you using? So for charts, I use NinjaTrader. And for the DOM and execution, I use Jigsaw. So earlier, Tilt was saying, well, I moved off of NinjaTrader because it was crashing on me. There was a time many, many years ago where NinjaTrader had a lot of stability issues. Now, if it crashes on you, it's probably your fault. But I have a lot of faults. You know, I will be going in and like programming something and, you know, like screw up all the time. And I don't want that to affect my execution. So I execute through Jigsaw, and then I don't have that problem, right? YouTube is obsessed with it. Did you guys see this headline? I don't know if it came out before this, but I was only seeing stuff about it yesterday. That Facebook is going to create AI agents that interact as regular users on the platform. Like, okay, if you make like a dozen of these things and they each have unique personalities and everybody can go and interact with them and it's kind of interesting, like, okay, maybe. But if you're gonna like flood the platform with AI agents so that like half of your interactions on Facebook are with robots, I'm not interested anymore, man. I'm not interested anymore. Like, here's the problem. Here's the problem that I see in social media. Like, the dead internet theory is real. Okay, like networks are valuable. Okay, it's a real thing too. Who you know matters a lot. Like, one of the largest predictors of success is not like how your parents raised you or how well you did in school, but simply where you live. You can go and you can take somebody, they're really poor and they have all poor habits and all of these things, but you put them in a rich area and they can be successful because they're able to leverage the benefits of that network from the people around them. That they're able to access people that have money and they're able to use that and leverage that to make their own businesses, essentially, right? So like, networks matter. And what the advent of the internet has done to some extent was kind of level the playing field. I have the ability, like, you can all talk to me. We're here on this stream every day. You can ask me any question that you want. I'm the only guy publicly here specializing in treasuries and order flow. Can tell you everything about it. Right? And you can access me at any time. That wasn't possible 30 years ago, right? You were somebody, you didn't live in Chicago, then tough. There was just no way for you to find out that information. That's what the internet has done. And what I've noticed happened was that, especially the earlier days of Facebook, that those networks that we were building online were incredibly powerful, too powerful. And the people at the companies said, oh, no, we can't allow people to have these huge, massively important networks and not be making tons and tons of money off of them from it. And so they basically destroyed our networks, destroyed our reach and our ability to actually like have real communities. And then they kind of like oversaturated it so that, you know, if I do create a Facebook group about a particular subject, there's just so much noise, so much nonsense that gets posted to them that they become useless. And there's so many people that you can never develop real relationships with people, and so you don't develop the network. And now you want to replace that network with AI? I don't think that Silicon Valley realizes why anybody was using any of these apps in the first place. It feels to me like YouTube is the only one that actually understands their own platform. YouTube is the one that goes, you know what, like, it's all the creators. The creators, they make good content, and so our primary, most important thing is that we have to serve our creators and make sure that incentives are aligned and all of these sorts of things. They're the only ones that seem to get it. Man. And it makes me mad to think about it because, like, a lot of millennials, like, that's what we did, is we built these relationships online, and then corporate America came along and killed them. Like, it makes me mad. Dead internet theory, yeah. But it won't be forever. at some point, somebody will come along and they'll make another. You know, I actually, as much as some people hate LinkedIn, like LinkedIn is actually a really great website to build a network with. I think the reason that people have a hard time with LinkedIn is because they don't actually use it. Like if you go to LinkedIn and you actually make posts and talk about the thing that you're doing, and then LinkedIn knows that you're a real person and not a bot, and then you can actually take advantage of it. Okay, so it looks like that we're going to return back to the neutral area. Well, it's VWAP is like at 30.5. That also happens to be where the cost basis short is. We'll see if they're able to push all the way back to 109 even. I'm a little bit skeptical about that, but we may perhaps rest there until we get the PMI news at the top of the hour, and then we'll see what that's all about. I've always found it challenging to make online connections. I tell you what, man, like back in like the early 2000s, it was easy to make online connections. I mean, I think part of the reason why we've had as much success here on this YouTube channel is because I remember that stuff and I treat it like it was back then, right? Like most people that come into streaming, they're trying to run their streaming channel like they're a top streamer, right? And that they have this huge audience of millions of people and you're just speaking to a big crowd. But I'm not. There's at most a dozen people here at a time. I'm able to give each one of you individual attention. And if I'm not here streaming, you can message me on Discord. Right? It's that personal touch that I think really gives us an edge. Like one of the things that I see people talk about is like, oh, well, do you do mentoring? No, I don't have to, because the stream is mentoring, and there's not a single thing that I could give you or would tell you in a mentoring session that I wouldn't tell you on the live stream, you know? And I only have that attitude because I have all of this experiences from the early 2000s when it was just forums before Facebook came along, where we had a real community and I knew everybody that was on that forum and, you know, talked to them every day. And it just makes me so sick what they've done to communities online, man. It's so sad. It's so sad. I think that to some extent you do still have communities like that on Discord, but what was the internet like in the early 2000s? Well, it was like each website was at about a specific interest instead of it all being centered on Reddit or Facebook. And instead of the content being presented to you based on some sort of an algorithm or based on how many people liked that piece of content, the content was simply presented to you in chronological order of when somebody had last posted about it. And so, you know, you would develop these communities of about, you know, 100, 200 active people. I mean, there would maybe be thousands of people that would read it, but the people that were really active, you know, small community, 100 or 200 people, and they were all kind of aware of the things that were going on, right? What happened was we basically said, that's not cool enough. We all want to become viral. We all want to be super viral, so everything has to be centralized. And it killed those small communities. They can't really survive in the world of Reddit and Facebook. You could make a small community like that on Reddit, but most people don't because they are all looking for the virality, you know? That's why I said the only place where I think it really still exists is Discord. Roared Welsh, you all the best for 2025. Hope you find a new challenge. Oh, thank you very much. So I've been looking for a new job, and there was like kind of a little flurry of like hiring activity just before Christmas. And I don't think that I'm going to find out what happened with any of that stuff until after next Monday. So that's really frustrating. And I don't, some of them are ones where I would have to do stuff pretty early, and I don't think that I would really be able to do the stream. So I'm kind of hoping that better opportunities pop along. And there's some other things I got to do. I need to change my website setup and everything so that the indicator package is more. Well, you know what? I can change this really easily. The one part, but I need to set up the affiliate program. And I kind of had it all good to go, but I was like, oh, I'm not gonna make that change yet. And now I don't have any time to do it because my wife over this Christmas break just has been working super crazy while the older kids are gone. So might not be until next week that I'll get a good day where I can go and change that part, but we should go and change the first part of it. Got about a minute here. Let's see here. Do I have? Oh, I don't have the new squawk turned on. That would probably. That's not right. That sounded terrible. Well, they're definitely pulling the liquidity and showing that this PMI is a significant event. Okay, this is a significant move down. Okay, so we got 49.3 versus the expected 48.2. So it was higher than expected, but still in contraction. Prices paid was 52.5 versus the expected 51.8. So I think that the move down is probably more to do with the prices paid more than anything. We are touching like that stop out zone at 26. So they might take a brief breather here. I don't know if that's enough for them to like just keep careening down or anything, but I would say that that is more significant than I was expecting for this report. So and could possibly explain the impulse short that we had earlier in the session. Never remember the name of certain tools. There we go. Okay. Let's see here. Omar, dumb question. Pulling the liquidity means the order on the book start to thin out and get yes. What I was referring to when you looked at the depth of market, that instead of there being 2,000 orders at each price, there was only like 50. So basically, the market makers were pulling all of their liquidity because they don't want to be holding liquidity out until after they get the news. So something I find a little curious here is that they sold the ZB, the 30-year, particularly hard compared to the other ones, it seems. So there could be a bit of spreading going on here, and if they're selling it in the 30-year, that means that is probably a steepener. But interestingly enough, the dollar rose big time on that initial news and has come back, but the other markets don't appear to have done it. I guess when you look at the S&P 500, it's a little bit more mixed, but the treasuries took a hit and are staying down, which is probably, due to the prices paid being higher than anticipated. So now the question is, do they just base out here and not do anything interesting for the next hour? Based on the amount of activity that I'm seeing right now, I think probably not. There is a small possibility that they come back to 29, but I think that news was significant, so maybe they continue lower. I'm not really getting good enough order flow to really strongly suggest that we're going to continue lower, though. There's a little something happened right there. I am seeing some steepening, so I think that if we're going to see a steepener, probably what you should see is a pullback with the 5 and 2 leading the way, and ZB lagging behind big time. I guess the play should just be to take the steepener, right? Buy the 10 and sell the 30. Can I have it locked for starters. So I'm not sure if my ratios are right now. No, it's still 2-1. Let's put this as an experiment. I'm kind of afraid that we may have already missed it. I don't know if my execution was too great there, but again, the issue is I'm not too sure that this steepening is going to continue. But I'm, like I missed the original trade, but like let's keep it up there still, like set it up and try it anyways. So far, they seem to be moving tick for tick. Now I take that back. Maybe the 10-year is moving a little faster. So remember, again, the PMIs is the most forward-looking piece of economic data that we get. So that suggesting price pressures means that these concerns that the Federal Reserve had that, you know, we need to be careful about inflation and so forth were not unfounded, right? It's kind of funny with this one because it's moved now, what, 4 ticks, but our spread hasn't moved at all. I wonder if I could have scalped on both sides of this. Okay, there's a little something there. Oh boy, what? Eric Trump, a picture of Eric Trump with the MSTR guy? Oh man, what is his name? Michael Saylor? Please no. Please no. When strategic reserve. Gosh. Oh, man. It's looking like we might be in the second leg of a baby meta order short. Yeah, I think so. Like the thing, so I got into this spread because I noticed how hard the 30-year got hit. I was thinking maybe the steepening continues. I think that I got in it too late because I would already be up like 2 ticks otherwise. But since then, they've just kind of moved down. So and I would say that the 10-year kind of led that move down. Like they're still moving tick for tick, but it seemed like this one would tick first. So Okay, well, that move up there in the 10-year was a little bit more... a little slippery. No, that's not what we want. So we're down a tick right now. Oh, don't we have a... let's see here. I always forget to look this up when we're doing this. Oh, wait. How come it's not... it's weird. Let's open a new one. There we go. So isn't there a way for me to... thought that there was a way for me to, you know, track the net profit of the thing. Maybe not. But I guess it shows me the total. Oh, this guy claims to be a profitable trader for 9 years on day trading, huh? He doesn't really say anything about how he's doing it. The account hasn't been around for very long either, so it's kind of suspicious. 'Cause then the other side of it is, I bet you could be a profitable day trader trading stocks, but it wouldn't necessarily be performance that would be super impressive either. As we were talking about earlier, you have to see like a risk adjusted return. This move is on in the S&P 500 is pretty interesting, man. Oh, yep, there you go. He's doing stocks. Well, things have definitely slowed down in the treasuries, and like activity levels are down. Yeah, you see here on the level 2 changes. Also seems to be a shift here in the resting orders filtered that we might need to keep an eye on. Some larger orders popping in here now, though, as well. Okay. I'm surprised this guy didn't take any trades, though. How are you going to limit your execution risk on the exit? I don't know. I mean, I think that I'm just going to try and take the limit order on both sides. And, well, I think the issue here is that probably my exit is just going to be at the top of the hour. But ideally, I would like to just take the best limit order on given to me at the time on both sides, and it should probably be okay. But working out those sorts of details are exactly why we are trying this. Kind of wish I could hold it longer because, you know, it looks like we've lost like maybe a tick or two. But, you know, there's still a good chance that the spread continues steepening. So... we'll see. It would be really funny if all of a sudden, like, you know, there ended up being a significant change in the spread against me. On that one, the Treasury's moving down a little bit, but the ZB still seems to be stuck at 26. Does kind of feel like doing this. I kind of feel like that I could just scalp the ticks. Like if I was always able to get filled on the limit like that on there, then I could take one tickers. Right? Just as long as I'm not doing it during a trend. Because the issue is, okay, so this would, let's say that we took the same trade. So we want to buy. We bought on the limit at 27, right? So then over on here, we want to sell on the limit over here. And what if it moves down before you're able to sell on the limit? Then you're screwed, right? So I have to be in a place where I'm really confident that I would get filled on both sides. But then once you're in it, then, you know, I get filled on the limit on the other side. And, you know, I'm hedged. And throughout most of this, I think that I probably could have pulled a number of ticks out. Despite, you know, the outrights moving around a little bit. For now, though, it's kind of looks like it's maybe wants to flatten out now. Maybe I'm just dead wrong. This is looking at this and I'm like, shouldn't we have taken a trade by now? Did I make another mistake? Hmm. I don't know if save history on that matters, but huh. No, it says that it's just not taken. Why is that though? No, that's not right. It's gotta be. No, it should have taken one today. Oh, no, wait, what is this? Yesterday it should have taken one. Why didn't it? That was yesterday. No, it does look like today it shouldn't have taken any, but yesterday it should have taken some, and I think maybe I didn't have it on the whole time. I don't know. But it looks like I've got the things set up right. The only one thing that I'm not sure about is here I've got this enabled. And I have save history on. Looks like things have... Oh, no, we're still maybe down a tick. So see, like if I were to get the limit order there, Oh, and then I'd have to get the limit order there. And then they would be no loss. We still got time. I still think that steepening is the right call, but I'm not super wedded to it. I still feel like that this is kind of a little bit of a shot in the dark, you know? Okay. Wow. They sure came back down to the lows awfully quickly, didn't they? But the ZB did not step over the edge. The ZN stepped to it. ZB is one tick higher. I just finished watching your video on volume profiles, and you just exposed to me how much I don't know. I feel like a puzzle that has been thrown on the ground and scattered around. Well, okay, so the reason that you feel that way is because what I just did was I took something that you thought you knew and just exposed that it was flawed, right? So I think that what will happen, basically what's happened is you've developed certain brain neurons to look at the market with a volume profile, right? And all of a sudden your brain is realizing that model that it has is wrong. So if you have a pretty plastic brain, in other words, you're able to make changes easily, you're still young, then what will happen is your brain will just readjust. And tomorrow and the next day, as it adjusts, you'll go back and you'll watch it and it won't feel so overwhelming. You'll just go, oh, so these they don't really have, they're just kind of happen, and they don't actually have any real significance as to like what the market thinks is an appropriate price. Okay. Like that's the thing that's frustrating about the empirical properties of the markets that you get from me. And I mean just the empirical properties that we're able to prove about the markets in general, is that they are actually quite limited. Like the things that we learn from them are quite limited, you know? And sometimes the result is something that we thought we knew is actually not true. Right? People thought that the volume profile was a representation of how fair the market thought a particular price was. And if they traded that price a lot, then that means that the market thought it was a really fair price. But really, when you go back and think about it, like that makes zero sense. Right? Why would you trade something if you thought the price was fair? Right? That doesn't make any sense at all. So once you stop looking at it as a reflection of value, and you just look at it as a reflection of where liquidity holes, completely changes your perspective and analysis of the market. So now the place where it's like there's so much to know is like, okay, so what do we have that could actually predict order flows, right? And that's a much more difficult puzzle to sort out. Oh boy, what would you say is the underlying first principle truths about the market? I mean, I don't think that you can say like what is the underlying first principle truth about the market without first specifying some sort of value system against which we are comparing that, right? So if the question is really what is the most important thing that we should know in order to give retail traders a chance at having success in the markets, then the first thing that I would tell you is financial markets are not efficient, contrary to what you've all been told. That there are inefficiencies built into the very structure of the market, the rules that govern how the market works. And those inefficiencies result in certain optimal strategies and certain outcomes. And sometimes you can take advantage of them. Sometimes you're not very competitive with those, but it's not efficient. And everybody says that, oh, the current price is perfectly reflective of all available information. That's not true, especially not on an intraday time frame. And so there is information all the time. In fact, the struggle here, so people thought, oh, the reason it's so hard to make money day trading, it's the reason it's so hard to make money from trading in general is because the markets are very, very efficient. But that's not it at all. It's because the markets are very statistically efficient, but very informationally inefficient. So like if I take the price and I try and do a statistical analysis of it, I find it looks like a random walk. But then if I go and I say, based on everything that we know, what should the price be? It will never be at that price that it's supposed to be. So it's a very informationally inefficient. And so there can be edge all over the place. There can be things that you know that can predict future order flows, but you end up still being wrong because the markets are so inefficient. And so it's actually the case that if the markets were more informationally efficient, trading would probably be easier, right? That's the first thing that you got to know. Once you understand that, I think that you end up taking a completely different approach. Because with the market is efficient kind of shtick, people say, okay, so everything that there is to know is embedded in this price. And then, yeah, the markets are pretty efficient, but prices have a tendency to trend. So I should be able to just stick with the trend and make money, right? Okay, well, momentum strategies work, but you're day trading, so that doesn't really work. When you know that there's all of these inefficiencies in the market, then you start to say, oh, well, I think that, the Federal Reserve is going to do this and that the market is not reading the data very well. Or I think that the PMI is likely to be a little bit hot, so we should sell the treasuries. And, like somebody, it looks to me like somebody sold the treasuries before the news today, that they thought that it was going to be high, and they were right. Yeah. Now you're looking for a completely different set of edges, and a lot of your edge has to do with just what you know about the market, things that you can read on CNBC and Zero Hedge and all these things, right? Yeah. Amir, what do you think we are lacking in order flow analysis and the DOM? Well, so I think that we have a pretty decent set of tools. Like within NinjaTrader, the tools that we've got are pretty darn good. Okay, and especially when you can make your own. Okay, like I think that this market order imbalance, which is kind of a different take on cumulative delta, it's basically the balance between market buys and market sells over a rolling window. It can be a really effective measure of what the orders are doing and whether we're trending or whatever, right? But where are we missing? Like, where is the market overall, the options that are available, lacking? And this is where I've kind of come to this thing that's like, it seems to me like the edge that I have, that I would make more from building a platform than I would from trading it, I think. But I could be wrong about that. So where are we missing? Well, one side that I think we're missing is on stocks. So there is order flow for stocks. My indicators will work with that order flow for stocks, but like hardly anybody's doing it, right? So that's one part. The second part, though, would be taking this information and incorporating it into machine learning and large language models. That's where I think we're really lacking. And I also think that we could kind of take the higher time frame look of it. Like, what are the flows that we're likely to see today, right? That could probably be quantified more, like we're just kind of spitballing it, right? But I think that if you had enough resources, programming time, you could quantify it. So that's where I think that we as retail traders are kind of the most lacking. And that's where I want to make a platform that would help us with some of those things and help us kind of even the score. Like it seems to me that the market makers over in stocks have a big advantage over retail traders, and I think that we can kind of close that gap a little bit. Yeah, put your indicators on the Magnificent Seven and use them to trade the SPOOs. See, that's a great idea. Is like, okay, put them on the Magnificent Seven as a bunch of data series, and then trade ES and use machine learning or something like that to sort out a strategy, because you're going to have so many data series at that point, right? So what might be more than an individual person can handle. So you put them on there, you run them for a year, and then you feed it into Python. Programming and trading a beautiful match. Well, I honestly don't see how you can really be competitive without programming in trading. I take that back, because you might have a strong network and access to information that can give you an edge, right? Like congressmen are pretty okay at trading because they have information, right? But especially like retail day traders and these ones that are trying, they want to trade technical analysis. I really don't see how anybody expects to be successful with that without programming. I think one of the things that happens is, people, they want to just trade the blank chart. Because they don't want to spend time and money on this deeper data analysis. Macro Trader says, thanks for the indicator suite. It's Jamal. Thank you very much. We put a lot of work into it. So, but so if you don't want to buy anything, then you would rather just trade with a naked chart, right? And then if you don't have the programming skills, then your conclusion is going to be, well, you can't backtest it. It's too complicated to backtest it anyways, right? Because anybody with the programming skills is going to go and look at price action, and they're going to go, oh, it doesn't work. Like, yeah. Learning is so hard, because always remember there are like 5,000 YouTubers out there saying you only need a chart. Yeah, right. Price action has become so incredibly popular. It's really kind of crazy how popular price action has become. And it's kind of only recently that I've kind of realized that part of the allure to it for people is that they, you don't have to spend any money on additional indicators or news squawks or anything like that, right? Because I've been running into starting to run into groups of people that, like, they don't like that I sell an indicator suite. They don't like. And why is that? Well, because they're price action traders. They think that everything that you need to know is just on a raw chart. And why is it alluring to them? Because they don't have the money to spend on those things. I kind of feel like that, well, it's $200 now, but I kind of feel like that $200 is really cheap for what you're getting. But especially compared to other indicator suites out there. Holy crap, man. Some of them are just insane. Like my suite is $200 now. We've increased it so that we can have some extra money to spend on marketing and stuff. But there are a lot of vendors out there that one individual indicator will be $200. Like they'll have like Ishimoku cloud indicator and it's $200. Like what? Okay. I don't think that an Ishimoku cloud is actually that complicated to make. I could probably make one in a day. It's just insane to me that some people are charging $200 for those things, right? And then I charge $200 for my whole suite that does sophisticated things that I honestly, looking at the vendors that I've seen, at least, I really don't think that they would be able to figure it out. Like there's too many little nuances there in how NinjaTrader works and how you have to do it to make it work correctly. To both doing the order flow side of it and being able to cache it. It's really, really valuable. And I charge $200 for it, and I'll have people come in and say, like, oh, it's an overpriced indicator suite. It's like, are you kidding me? It's like, it's more sophisticated and more featured than other suites out there, and I'm charging less for it than other suites out there. And it's overpriced? Okay. Okay. It's like a person that came in Discord who said that the other day. But you know what? These people that say those, like this person that was in Discord. Oh, and this is what the other funny thing that I see happen all the time when people decide to attack me, at least. Because, like, if I make a video, by the way, why did our music stop? Start that back up again. And it is time to get going. So this will probably be the last thing that we'll talk about. But, you know, when somebody comes in and starts to attack me, I get excited. Like, having that guy that came into Discord last night I was kind of like, okay, like this is actually a good thing, right? But the problem that I keep running into with that is that the people that decide to attack me really don't have a effing clue what's going on. Like, yeah, that means you're doing something good. Yeah, well, you know, like, it's activity. It creates, like, I would love nothing more than for people on my video that I made about price action to, you know, argue super hard about price action in the comments of the video. And they don't. And when they do, they're so clueless that everybody just laughs at them. And so it doesn't actually generate activity. So, like, that's what happened in Discord last night is one other person in chat came along and was like, oh, you seem like an idiot. And so this guy started attacking this other guy as like, oh, well, you're just a Seth have fun, you know, with his overpriced indicator package, yada, yada, yada. But the guy didn't understand that the Discord server that we link is not the Speculator Seth Discord server. It's the Futures Trading Discord server. It existed before this channel. It is a separate thing. I have a paid Discord now that's $3 a month, which is where we're posting like some of the strategies and stuff that we've been, you know, the code. I post the code over there. It's only $3 a month. And that's the Speculator Seth Discord. So most of the people that are in the Futures Trading Discord have nothing to do with me. They don't even know, like, they know that I administrate it, but they have maybe never even been on my stream before and are not necessarily using my indicators. And there's a user permission in there where you're given regular permissions, and it happens to everybody. When you start, you're just everyone and you can't post pictures. And then as soon as I see that you're participating, I add the regular permissions to you. And this guy thought that regular's permission meant that you were a Speculator Seth Shell. So it was just kind of like, there's not entertaining arguing with the guy or anything like that, because they have no clue what's going on. And so it doesn't generate the kind of activity that would like actually help, you know? So it's the name of the game in trading, finding inefficiencies and exploiting them. Also, what's your definition of an inefficiency? Yeah, I think that we could say that if we've found a reliable edge, that means that there's an inefficiency in the market, which is to say that, like, by default, we would expect the market to be a random walk. And if it's not a random walk, then there's an inefficiency in there somewhere. Yes. And if you can find an inefficiency, there's two kind of major types of inefficiencies. Well, I guess you could split this up into categories a couple of different ways, but one way to split it up is that there are inefficiencies created by our psychology, what people tend to do. Let's maybe not even call it psychology, but like what people tend to do. And there are inefficiencies that are created by the structure of the market. Now, the issue with inefficiencies based on what people tend to do is that if people tend to do something and it causes the market to behave in a certain way, then other people will notice that and adjust their behavior. And so behavioral inefficiencies are not necessarily reliable. Whereas structural inefficiencies, because they're created by like the actual rules of the game, unless the regulators come in and change the rules, or the exchange comes in and changes how the queue works or something like that, those inefficiencies will always be there, right? So like we were talking earlier, the fact that a volume profile tends to follow a Gaussian distribution with one price having more volume at it than the others, that is something that is caused by the structure of the market. That what happens is you will get into a spot where the demand for liquidity outpaces the liquidity available, and then because of that, we just get stuck. You don't get a lot of liquidity being placed there, but they trade it back and forth, and it stays there for a long time, and that's why so much volume gets traded there. So it has nothing to do with fair value or anything like that. It's caused by the limit order book. Any market that's used as a limit order book will exhibit this behavior, and it's structural, right? Now, is there a way for you to make money from that particular one? I'm not sure. It can certainly prevent you from getting into bad trades, because you know when one of those forms that we're probably going to hang out there for a while. So there might not necessarily be a point in you taking a trade at that exact moment. So it helps, right? That would be a structural, inefficiency in the market. Yes. Structural inefficiencies are better. Right? Now there can also be informational inefficiencies that is something that you know that should be affect the fundamental value of the price, but at the current moment it's not. So the market is very informationally inefficient. Oh, by the way, while I was doing that whole monologue, we moved right back up here. And I'm down to tick again. That sucks. So I think what I'm going to do is I'm going to put my cells up here and my buy down here. And hopefully both sides of these get filled. But I might just leave it, walk away, come back at noon and see if it worked or not. Got a lot to learn. Yeah, so again, go to speculatorset.com/strategy.html, sign up for the mailing list, and then it sends you a PDF. And that PDF is what is my best attempt at being as thorough as I can on this particular subject. I would like to make a book where I could go into each individual economic reports, each individual asset out there, to kind of give you the pointers on the key things about them that you'd want to know, right? I think we could write a book about it, but I ain't got the time for that right now. It's sad because now would kind of maybe be a point where I could spend time on that, but I have spending so much time watching kids that if I didn't have to watch the kids during all this time, then I think that I would have already have started it. But again, it's just this one or two key insights into the market, and the rest is just built off of that, right? And so it's not as overwhelming as you think. It's so different. You're looking at it now, it's going to feel overwhelming because your brain has to adapt to it. But you give it a few days, like you'll read my strategy HTML, and you'll consume all of this information. It'll be really overwhelming. And then go back and read it like 2 days later, and you'd be like, oh, well, this is actually like pretty straightforward. You'll see. Okay, so I'm gonna get going here. I do need to go and wake the kids up. So, kind of sucks. I should have taken it off when I was like up one tick and it was down at the bottom. Woulda, coulda, shoulda. We are trading in like a, what, 1, 2, 3 or so tick range in the spread, so there was room for me to get a little bit out. But if it's only going to move that much, you can pay so much in commissions. I don't know if it's worth it. Oh well. Yeah. Anyways, I think got all that out. By the way, we increased, the indicator package, but you can go and grab that at speculatorseth.com. In a few days, we should have an affiliate program going. So you can make 50% affiliate commission off of a $200 purchase. That's pretty darn good. So stick around for that. And in the meantime, stay excellent, team.